All right, guys. Good afternoon. Today is Sunday, July 20th. We're going to break down the futures market and the outlook for the week. Um, Going right into it, we're going to get into oil. Um, Noted before, oil was on a rip with all the tensions overseas and everything. So, shot up, had some consolidation up here, and then it broke down. Wave B actually came up and tested what was essentially that neckline of the double top up here. And then we got the breakdown of the trend line going up um, right into a point of support and resistance. So that was broken. So now we're looking for this downside to continue here into the week. I think that, anything as long as you get a lower low push down here below 65.30, 65.40 area and a push down below 65, realistically 64, we could see that base pick up in the 60 to $57 range. That's my price target that I'm ranging in that area. If you go in, kind of zoom in a little bit here, still very, very bearish. You can kind of see the expanded consolidation right here. That's why we're looking for that breakdown right here. Pretty much it's right underneath it at that level of support. This low right here that we talked about earlier, this 65.30 area, would still probably be my price point that I'd look for. But I think that it's safe to say that anything towards the downside can be looked at. Moving on, we're going into ES. Just like all the equities, this thing has just been on a rip. Had a little bit of a, came up all-time highs, pulled back a little bit, and then it is just, there's no end in sight to the bull run. Right now, we're getting the take profit on the trend indicator signal. That could signal a top. You kind of have this area of, I'm gonna call it kind of consolidation up here. It looks like it wanted to break up over the top, came down. If we get that push back up here and we can hold this top level of like 63.40, essentially 63.35, if we can hold this area, the up and break back up over 63.60, then I think that our price target of about first price target would be 6,400. Regardless of what this says, the first price target would be 6,400 if we break up over 63.60. So if not, you could play it back in the range with this area up here as a stop, back down to the bottom of this. And then inevitably, if it broke below this at 62.40 area, then we could see it fall back down to 6,200 is the first stop, and then probably right back down to 61.58. So that is my outlook on ES. Going into gold, we had talked about it kind of trading range bound in between these three lines. We see that that is the case. If this does not come back up to test this and we don't breach back up over this, then we can look to play this downside and come back down to settle down at 32.50. But you got the trend indicator coming back up on the 4 hour. And then if we zoom into the 1 hour time frame, we got it coming down. So you got a little bit of disagreement there in the indicators, which could mean that we're in for some choppiness, and that's kind of what we're in for here. Is the when you expand it out, this just is an area of choppiness. It's down, up, and it's just bouncing around within this defined range. Even though it's a wide range, that's just how metals work. Let's take a look at copper. Copper, I like it now because we had a pop right up over this level, this 63 900-ish area. If it stays above this, it'll probably come down and touch this level. If it comes down and we see it hold its ground here and push back up, we can look to play this name long. This one still has the bearish connotation, or I'm sorry, the bullish connotation on the 1 hour and the smaller time frame, so it's not as choppy as we saw with gold just a second ago. We can look for this. I mean, it kind of has been bouncing right off of that, bouncing. And this almost looks like a descending triangle at first. When you drew a line across it, it was lower highs into like a static support area, but then you see it start to pull up. A lot of times, descending triangles, all these patterns are great, but they're very subjective. And you got to remember that if you have a preceding bullish move, you're probably not going to get a descending triangle, because a descending triangle was more or less a continuation pattern for the bearish movement. But they can still be used. It's the inverse almost. So when you see a descending triangle on a bullish move up, it doesn't mean that there's a bearish move to be materialized. It's more that once you see that trend line break, you get that move back up. Just a quick thought on that. Let's go into Bitcoin. Bitcoin has just been on a rip. I mean, it shot up all-time highs. This could be, I mean, this is a classic, very, very classic example of a wave 5 push up after a wave 3, and then you get the ABC correction. I could see the ABC correction, the C wave coming back down to this 112 area, which was, I think, previous all-time highs. If it comes and settles back down there and we get a couple bars that close above it and start to trend upwards, I would look to play this long all day long without hesitation. Getting into MNQ. Actually, let's go to NQ because I got MNQ marked up a good bit. There you go. A little bit cleaner of a chart. Same thing as ES, just don't really have that. I mean, this is like a consolidation area, but it's more, it's just been trending up. I would draw more trend lines here if it was me. Just kind of want to stay in this. Guess you could kind of get rid of that. Leave that outlier out there. Either way, it's kind of in this defined range going up and down. This could come back down, and if it ends up breaking this trend line up, then we could see, 22,300 area. Yeah, maybe more like 22,250. That's if we get the break. The upside has been way more resilient and way more dependable than the downside. So I would look ideally for this line to break and go back up, or it'll just be range bound until it finds its way. So like I said, if I see this fall off into the opening session and then we kind of push up overnight, I'll take it long here all day long. So that's just kind of my outlook on NQ. Very simple. The trend indicator is still showing bullish. So like I said, anything that's materialized should be played to the upside. Anything that presents itself. We noted last week that we really wanted to break over this 1440 mark, and we got that. And it pulled back, shot back up over it. If the retest settles here, we can look for the push of the wave 5 up again to further validate the wave 5. I don't think we're in for a ABC correction just yet. RTY is the only one that kind of looks like it's ready to reverse. Came down, shot back up, and we've had a good upside movement. But right here, you can see that we got little head and shoulders pattern starting here. You got the left shoulder, right shoulder, the head, and you got your neckline right here. So if this breaks 2200, we can see it drop back down towards the 2100 region. We do have the trend indicator curling with the precursor there of the red indicator, and then the bull bear impulse is flashing red as well. Something to watch. Let's see, is this our trade map? No, it's not. All right, let's take a look at the trade map here in a second. We'll let that load. On the 1 hour time frame, we'll come back to it. But yeah, RTY is looking a little more bearish than ES and NQ. Probably the same for YM, just not really even a head and shoulders pattern. This is the 4 hour. It just keeps knocking up into this 45,000 resistance point, essentially 45,200, and just keeps falling right back down. The good thing about this is, let's put our trend lines on. Is we're looking basically for that to break. I'm not even going to draw the downside. If it breaks below 44,000, then you can look to play it down to 43,000. But if we break up over this trend line right here, then I think we're going to go back to retest 20 or 45 210 and inevitably push up through that. So that is basically my outlook on everything that we got. Let's go back to the trade map real quick. See, it's underneath the pivot point. Let's see how it opens, but it's underneath the pivot point. I mean, RTY, you got the MACD curling. The RSI did curl, but it looks like it's still got a ton of room to the downside, but it could cross back up a little bit. But the trend indicator is still flashing red, so I don't think the trend's over. I think we still got some downside to look forward to in RTY. But that is basically my analysis for the week. Guys, come check us out on Discord. We'll be trading live the Asian session at night, and then CJ and Francis handle the New York session. And I'm going to try to start trading the London Open in the later evenings, probably 2-3 times a week. But come check us out. Don't forget to like and subscribe, and let me know if you have any questions or any comments, and leave them down below. Thanks, and see you next week.